Welcome to Copytraders Club, where you can learn how to make more money copy trading. I'm Gavin McCauley, my name and username on eToro. You can continue the conversation on Discord and Facebook. If you like this podcast and want to see it continue, you can do your part by recommending it to one person or group of people this week. Today we chat with a very high-profile Black Star PI. Her journey has taken her from Cape Town via Oxford University to the pinnacle of her life's achievement, an invitation to the Copytraders Clubhouse. Here we go. Episode 29 of Copytraders Club, and you guessed it, we have Heloise Greeff joining us today, the reigning queen of eToro. So the red carpet here has been liberally doused in shake and vac to put the freshness back, in honour of her arrival. Watch as she makes her way up the stone steps to the grand atrium. Heloise, hello, welkom bij Copytraders Club.
Hallo Gavin, dankie. Ek's baie opgewonde om hier te wees.
That's always fun.
That's perfect. Feeling extra welcome.
Well, you are very welcome indeed, Heloise. And before we proceed through to the lounge, got to answer a series of quickfire questions. I think you know the drill. Are you ready?
Oh, Gavin, please don't make me wait 1 second longer.
Username on eToro.
RubyMZA,
Date you joined eToro.
June 2016,
Year of birth.
1990,
Place of residence.
Oxford, UK,
Profession.
AI Research Fellow.
Briefly state what you aim to achieve on eToro.
Incremental, consistent gains to deliver a passive income on my way to financial freedom, and in the process, take thousands of people with me.
Name one of your investing heroes.
I don't really believe in heroes, but since I was recently pitched against him in the Times, I'll go with the classic Sage of Omaha.
Name one of your favourite investing books.
Not really an investing book, but has been quite fundamental in the way I think, will be The Alchemist.
That completes the formalities. Let's proceed into the VIP section here at the Clubhouse, the splendid Copytraders Lounge. Heloise Greeff, aka RubyMZA, are you ready for this magical transition?
Let's go!
So here we are now, Heloise, in the Copytraders Lounge. It's been a long time coming.
It has. I've been lying awake for the last 2 nights in anticipation of this moment. I was very excited to receive your invite the day it came through, Gavin.
Very good. Well, we did get in touch very early on in the podcast's story, but you're so busy. It's taken us this long to finally get you on. But we're delighted to have you. RubyMZA, which is your pseudonym, but I find no explanation for what that means. I've once heard you saying you think it sounded like a stripper name. Tell us the provenance of RubyMZA.
Yeah, it was really just when I joined eToro, a lot of people told me I'm going to burn my fingers and lose money. And so it was something I wanted to do in secret. I didn't want people to be able to find me. And so I picked probably the most random name I could think of on the internet. I added the ZA just for that's South Africa. So that's probably the only thing which has any meaning, but it was meant to be a real pseudonym so that I couldn't be found, which is no longer so secret.
And now you can't change it?
No, I've asked about changing it, but there's no way for eToro to change it. So one recommendation to new people would be to have a think about what name you choose, because you're stuck with it for life.
Well, I think yours is the least relied upon username on eToro. no one ever really calls you RubyMZA. They call you Heloise Greeff. And people talk about J Nemesis or Robert Merck or Campervans and One Girl. But you always go by your own name.
Yeah, I think that's probably a good thing and a bad thing that people are able to find me either via my real name. So yeah, it's got its pros and cons.
Yeah, well, you're not exactly a hidden figure these days. You're one of the most public-facing PIs there are. You feature quite a lot on YouTube. There's a great interview with you on Marvin Germo's channel. And as I like to do with sort of the higher profile PIs, rather than cover old ground by asking the same questions that everybody else has, can I give a quick summary, get that out of the way, and we can get past that sort of surface level stuff and mine for nuggets of conversational gold?
Sounds good. Let's see what you can dig up.
Okay, so Heloise from Cape Town, South Africa, now lives in Oxford, where, among other things, you have a French bulldog and an Airbnb property. As everyone probably knows, you have a very extensive and impressive educational background, including an MBA at Oxford University. And you're currently a research fellow in machine learning at the University of Oxford, among other things. Is that a good summary in a nutshell?
That's perfect. And I'm really glad you got the French bulldog in there.
What's the name of your French bulldog? That's what everyone wants to know.
Her name is Pepper. That's the $1 million question, isn't it?
My $1 million question is, when you first came over from South Africa and began to walk the hallowed halls of Oxford, did you feel like an imposter, an undeserving outsider, or did you feel instantly that you belonged there and that you'd finally found your people?
I think a bit of both. I still feel like an imposter some days because it was always my dream to go to Oxford. And to do so on a scholarship was a dream of a dream, essentially. And so when I finally arrived, I, for a very long time, pinched myself when I saw the, Oxford buildings or, as you say, walked the halls. But yeah, I still struggle with imposter syndrome until today because I'm always questioning whether I'm good enough to be here. Because one of the great things about Oxford, they say, is you only get appreciated once you leave Oxford, because in Oxford itself, everyone has an Oxford degree, everyone is doctor something. So you're just another, somebody here. You're nobody great when you hang around here.
And you say you came over on a scholarship. I see you mentioning you were a Rhodes Scholar. They still use the term Rhodes Scholar?
Yeah, they do. The history of the scholarship has been, very well documented in the media with the Rhodes Must Fall movement. And the scholarship committee continues to, acknowledge it, but we can't shy away from it. And so that's the stand that they've kept by and the name that they continue to hold.
And the statue came down in Oxford, didn't it? Or did it?
That's a good question. I think there might still be a committee for it to come down. Like all things in Oxford, nothing happens very fast.
So, did you encounter snobbery from your classmates in Oxford, the children of the powerful?
Yes, and that wasn't a surprise to me because I encountered that snobbery even when I went to university in South Africa. I studied an engineering undergraduate degree, and I was one of only 4 girls in a class of hundreds of men. So there was always this legacy of I'm studying engineering because my father was an engineer and my grandfather was an engineer. And so for almost the first year, I had to prove to my classmates that I was just as good an engineer as them and I had every right to be there. And so in Oxford, it was a bit the same, but different in that I was from an African university, which isn't necessarily as well ranked as my peers, who in the postgraduate community of Oxford are very international. They'll come from kind of big American Ivy League schools. And so, yeah, there's always this perception that you are not from one of those top 100 schools in the world.
Do you find it refreshing to now be in a meritocratic arena like eToro, where a PI's educational background or family connections seem to be of minimal significance?
I do. That's one thing that drew me to eToro. It's one thing that I love about the internet. It's got its pros and cons that people sometimes hide behind their identities, but especially in something like investing, it's definitely bringing down the traditional boys club and is letting women into this arena, which they wouldn't necessarily be able to if they had to enter into these physical spaces. So it's very exciting for me.
Yeah, and it's a meritocracy beyond the gender gap. We're also talking people's backgrounds, education, like Jay Nemesis, for example. When I spoke to him, he even thinks there's an element of inverse snobbery at play, contributing to his success, where copiers are attracted to the absence of letters after his name, or any platform of privilege. And I suppose both could work. Like, your educational background is impressive and likely impresses your copiers and followers. And his success in the absence of an educational background impresses his.
Yeah, that's definitely one of the great things of having a global community, whether it's on YouTube or eToro or wherever. We can find our kind, we can find our tribe, and we can find people who, have um, personality traits or, worldviews that resonates with how we see the world. And so I think by having that playing field on eToro, there's definitely a space for everyone. And like, if you want to compare me and Jane that way, we both have a following for whatever reason it might be, and that's the great thing about the internet, isn't it?
Absolutely. And speaking of worldview, let's have a little dip into your current professional life at Oxford. Let me read this little quote. Her work involves creating machine learning algorithms that perform remote health monitoring of rural patients in limited resource settings. This includes studies on hand pumps in Kenya and Bangladesh, funded by UNICEF, and ICU patients in Vietnam, funded by Wellcome Trust. In 2018, she was named as one of South Africa's 50 inspiring women in tech, and, together with her team, won the Oxford Vice-Chancellor's Innovation Award for the Oxford Smart Hand Pump as part of her DPhil work. So that's obviously very impressive. I read a little bit about the water pump application in Africa. Can you just expand on that a little bit so the listener can get an idea of the real world application of your work?
Yeah, certainly. I mean, when I came to Oxford, as I mentioned, I had a background in mechatronics engineering, which is essentially robotics engineering. And one of the things I wanted to do when I arrived in Oxford was develop medical devices. It was one of my passions because growing up in South Africa, there was a big gap in the healthcare system. And so it was something that I wanted to address from a very young age. But as Oxford works, there isn't always projects which you are interested in. But the other thing I soon realized was that addressing healthcare in those types of settings may not always resolve the kind of origin of the problem. And in this case, it was people using contaminated water from all kinds of resources. So there's about more than 1 million people in sub-Saharan Africa who still today, every day, use the manually operated hand pumps to collect their daily water. And these hand pumps in our early study, when they broke down, they would remain broken for up to 30 days. Now, UNICEF is very interested in this because young children especially are affected by developing, for instance, diarrhea, which again impacts their mental and emotional development in a young age. And so the idea was really to use technology to kind of give an early warning of when these hand pumps would break. Now, the reality is a lot more complicated than that, because whenever you have a machine which gives an alert, you also have to have a system to respond to that alert. So it was a very complicated project. I spent about 2 years living in Kenya, collecting data from bespoke sensors, which we designed and installed in the hand pump handles, collected the high frequency data, and then developed the machine learning algorithms to predict when those hand pumps are going to break ultimately, so that we can reduce the downtime in this and ensure that people have access to a reliable water source.
Well, it's amazing to be involved in such meaningful work. Congratulations. I always like to tell the PIs I'm chatting to how I came across them. Well, I have to say I joined at the end of November last year, and you have always been one of the most high-profile PIs in my time on eToro. One of maybe 5 or 6 ubiquitous names, and the sole female in that group, in my perception, which means you stand out even more than the guys. Okay, so let's take a question from the art of people. Would you like to give me a number between 1 and 10?
Let's go for number 5.
What's the most exciting thing in your personal life right now?
It must be, I'm currently learning Hindi, and I've always wanted to learn an additional language. I started trying to learn Spanish, but then at the end of last year, I enrolled in Oxford's elementary Hindi, and I just mastered reading and writing the Devanagari script. So I'm really excited about that. I feel like a 4-year-old child when I'm sat watching Hindi like child documentaries and reading the books. So that's quite exciting for me at the moment.
Being such a big fan of the show, Heloise, I know you know that at this stage I'm going to ask you to read your bio. So today, can you please read your bio down to and including portfolio period?
Yep, sure. Strategy type, long-term equity investor. Strategy description. My portfolio strategy focuses on global equities promising future growth 5 to 10 years. My positions are based on fundamental analysis combined with proprietary machine learning algorithms to understand unique market patterns. I keep a diverse portfolio to spread risk while maximizing returns. Portfolio period, long term, more than 5 years.
Now, when was the last time you updated your bio?
Recently.
Yes, so recently that some of my questions are going to seem ill-informed because I based them on your bio of 10 days ago, a week ago. My main issue is understanding your overall method. From your bio that I looked at a few days ago, it sounded like you lean much more heavily on technical analysis than fundamentals. In fact, the word fundamental didn't appear in your bio 10 days ago. And the word technical appeared twice, which seemed odd to me for a long-term holder, so I had a series of questions prepared to try and understand this. But I see elsewhere you express your method in different ways. In one interview, you said, I don't disregard fundamentals entirely, but they're not at the forefront. In other places, you say you use fundamentals to identify opportunities and technicals to assess good entry and exit points, which is clear and a pretty common approach. It struck me that your approach, the way it was previously expressed, was uncommon. So can you clarify for the listener and for the person sitting opposite you the relationship between your use of fundamental and technical analysis?
Yeah, sure. And I'm sorry to have thrown you off by updating my bio, but I think it's part of also how I've evolved in probably communicating my strategy. That bio was about more than 2 years old. And that's because my strategy and my method has been self-taught and developed over a period of time. So I was also quoted in the Bloomberg for my use of the social trading hive mind as one of my data points, which I use to kind of hone in or find specific themes. And once I have found that company or the sector that I want to target for my research, I will use a combination of fundamental analysis and then also the proprietary machine learning algorithms, which I've developed a few years back. So those are kind of how I use the two interchangeably. And the reason why there's probably this discrepancy is because for a long time I didn't quite know how to explain what was happening in my head when I was consuming all this information.
Okay, so the machine learning only comes in when it's time to look for an entry price?
No, it comes in the beginning and the end. So the important thing about the algorithms is that they're not a black box. So it's not a robo trading or algo trading kind of scenario where I simply manually execute whatever is being told to me. But I use it in the way how I fundamentally see the place of AI for now, and that is as a decision support system to humans. So we can essentially utilize AI's capability to process much larger and complex data sets than I would be able to if I am sat by myself or even with a team of analysts, and then use the output from that to enhance the human's decision that they end up making. So it's really, I guess, the modern equivalent of an abacus or a calculator. You wouldn't expect me to sit here and count on my fingers. I'll just use those tools. So they could either be used, machine learning could either be used afterwards. So, for example, to identify entry or exit points, or I sometimes use it as part of my fundamental analysis. And the reason I don't talk about that is because it can become confusing to people. So using a technique like natural language processing to kind of quickly go through a lot of company reports or documents to pick up key trends that are going on, something which would have taken me days to read. And so, yeah, that's why it comes in at different places in my analysis.
Okay, so it's not just numeric, it's also linguistic.
Yes, it's both.
Have you read the book Investing Between the Lines?
I have not, no.
Investing Between the Lines by L.J. Rittenhouse. How to Make Smarter Decisions by Decoding CEO Communications. She's a woman that's developed this whole system of assessing the frequency of words and the use of language to try and tease out dishonesty or exaggeration or, what CEOs giving it to you straight and things like that. It's very interesting.
Yeah, so in a similar way, I use that as part of analyzing like the hive mind. So in order to look at loads of tweets or loads of posts on eToro or even multiple company reports at the same time, if you use natural language processing, you can quickly pick up words or word types or strings of words that are consistently repeating themselves, rather than me sitting there with a highlighter trying to go through a pile of documents.
Okay, and when it comes to the job of technical analysis, to what extent is that done by the machines and to what extent does that involve human input?
Yeah, so my technical analysis is almost purely based on machine learning. I don't use any of the kind of I'm not trained. I don't know many. Well, I know them now but I don't use any of the typical technical analysis tools just because I use machine learning. It's something that I'm comfortable with. It's a way that I'm comfortable to process numerical data. So my technical analysis is almost exclusively by machine learning algorithms.
Okay, so if I could ask you a potentially oversimplistic question. When you come to a decision to make an investment, is there any way you can apportion responsibility for that decision between the human mind and machine learning?
I think the decision is always still 100% a human decision. And that's, as I said, where I see the place of AI in any applications. It's probably a fundamental way how different data scientists see AI. There's a group of people who think that AI should run the world. I'm not part of that group. I'm part of the group who still believes that humans should be making the decisions and we should be using AI to help us make those decisions with more certainty than we would have otherwise. And that's the key distinction.
Okay, well, I'm very keen to nail you down to giving me numbers on something. So here's another question of a similar ilk. You have a full-time job. What proportion of your time do you dedicate to being a PI?
Oh, I think I'm going to disappoint you with this one as well. Um, I mean, it's I get this question a lot, especially because I think I'm one of the last standing elite pros who hasn't retired into a full-time popular investor role yet. But I'm very fortunate to do what I'm passionate about, and I always believe you should have a complementary skill set. So it's really difficult for me to kind of distinguish those two in terms of, if I'm constantly dealing with complex data sets, economic data, for example, and dealing with those complex realities, it makes me a better data scientist. But at the same time, if I'm developing cutting edge algorithms and publishing them, that makes me a better analyst when I come to my investments. And so it's really hard for me to say which portion of which is eToro, because what do you mean when you're asking if somebody is full time on eToro? Are you asking me, do I have eToro app or platform open on my computer for 8 hours a day? Like, what exactly do we define that as? And that's one of the complexities, I think, with how people are working now, is that it's all in parallel and people do multiple things at the same time, and we draw on different skill set from different places. So yeah, does it mean I have fewer YouTube videos than somebody who doesn't have a full-time job? Yeah, I definitely do have fewer YouTube videos and fewer posts because I'm sitting in a corner reading somebody's code or writing my own code or something else. But that also contributes to how I invest.
Okay, I'm very impressed with your answer, even though it was terribly evasive. Let's move on to something else that we can try and quantify, if you don't avoid this as well. Risk score. Is your risk score fair?
Yeah, I think it's totally fair. I have no gripes with my risk score. I carry it with pride.
You say you prioritize a low risk score, 3 or 4. Here at Copytraders Club, we have considerable reservations about the usefulness of the risk score as it is on eToro. And we certainly don't deal in the silliness that is average risk score. Risk means max risk. As copiers, we want to know when our money was most at risk. So, taking the max risk score at face value, you are a pretty steady 5, which is quite low and consistent, certainly. Single digit max drawdowns, daily, weekly, and yearly. Unless this has changed in the last few days. So all of these indicators do suggest a steady ship. I'd say that's something you're very happy about.
Yeah, that's definitely something I prioritize, and something people can expect when they copy me is that it's consistent returns. I try to, as you say, keep the ship as steady as possible, is prioritized over, risky positions or kind of greedy trades.
Okay, copier numbers and AUM.
As of today, 20,672 copiers. And my AUM, I think when I last checked, was just over 45 million.
Big numbers. I looked back at the Felix Falix video that was released on the 14th of August 2020. Today is the 12th of August, so it's almost exactly a year ago. And your copier numbers have gone from 1,673 to 20,672. So over 92% of your copiers have come in the last 12 months. Wow. How much of that is thanks to eToro placing you front and center?
Yeah, so actually over 92% of my copiers came in a matter of 3 or 4 months because I haven't increased my number of copiers significantly since, I would say, February. So I hit 20,000 copiers around that time, and it's been pretty consistent since then. So there was an even more exponential growth than I think what you just explained. Um, I definitely think part of it comes from eToro supporting me, but at the same time, I've also shied away from that a lot. So when I first became a PI in 2019, they very much encouraged me to fill out one of these blogs. You may have seen that they have some popular investors who are highlighted on the website. I'm not one of them, and that's because they just couldn't pin me down to complete that answers for that. And it was because I wanted my copiers to grow organically because I wanted to organically get used to the responsibility of having a high amount of copiers. I haven't been featured in the editors list since 2019, but I definitely think that exponential growth was in part due to an article in Bloomberg which came out around August last year. And then at the same time, we can't discount how much eToro itself has grown during the same period. So, I'm very fortunate that some of those copiers have come my way. A lot of people have joined the platform, but I think there are a lot of other PIs who've seen similar growth during that period.
Well, I assumed you would have been on Editor's Choice, and that explains the sharp rise. Let me just explain for the listener. Your copier graph shows some relatively slow progress and then a massive cliff face followed by a plateau. Appropriately, it looks a lot like Table Mountain to me.
Love the reference.
Now, it's interesting that you say that because just recently I was speaking to a couple of female PIs, inviting them to come on the show, and they both declined. And also one of them mentioned that she had been asked to go on Editor's Choice or invited to go on Editor's Choice, and she declined that as well. I wonder to what extent does that indicate a difference between the male and female approach to this sort of thing? I can't imagine many guys turning down Editor's Choice. I mean, people might turn down going on a podcast for 1,000 reasons, but to not want the leg up that is Editor's Choice, incredible accelerator in your eToro career. Does that tell you anything about women on eToro and perhaps their reticence to push themselves forward and be as aggressive as the guys?
Yeah, I think it's definitely the story and the picture that you just painted is not at all different to mine. I mean, I've been a popular investor for 2 years now, since 2019, and you joke that I'm busy, but in part of why you couldn't pin me down was also just because a fear of exposing ourselves, exposing what putting ourselves out there. And it's something which I was very fortunate that eToro and some of the other PIs, Jay, has really supported me a lot in kind of growing my own self-confidence. I was recently at the focus group with the eToro Global COO, Head Faber, where they were looking specifically at this problem. One of how do we bring more women onto the platform? Because eToro's done quite well in that, although they still have a long way to go. But then secondly, how do we get more women who can accelerate at the popular investor program? And I think this focus group was a really good starting point for them to understand some of the challenges of what we were facing. Like one of mine is still giving interviews, or like having an active YouTube channel is it's just the way we put ourselves out there, sometimes to our own detriment. I heard on your recently you had, I think, was it Angelica? You had a female copy trader on the program, and Anastasia, sorry. She also made reference to women actually having better returns than men. And I've heard this a few times now, and I actually looked it up. There are multiple sources where reports actually state that women do better than men in terms of their results. Like there was a Fidelity report in 2017 where they found that women outperformed men by almost 40 basis points. But yeah, a big part of their success is that they're less impulsive. They need more information to make decisions, and they trade less frequently. But the biggest barrier for women is still the lack of confidence in their own skills. So it's not an eToro specific problem. It's a kind of problem across the board.
I've also read people talking about how investing is full of young men, and there are other impulses in young men, strong urges that young men have and need to act upon. I'm handling this very indelicately, but the point being that such a situation is not ideal for the investing mindset.
Yeah, I mean, without getting into the nuances of the differences between men and women, because I think we can pretty quickly stereotype people, but there's definitely been quite a number of research studies that have come out to show that female investors, both retail and professional female investors, although they're heavily underrepresented, do consistently outperform men. Well, not consistently, but there are a few studies. And so not only in in bullish markets, but also in bearish markets. I think there was one study in 2015 where the female investors using something called OpenFolio, they lost on average 2.5% that year, and the men lost 3.8%. And similarly with professional female investors, they mutual funds who are managed by females on average do about 43%, and that outperforms the male managed funds, which do about 41%. So it's not massive differences, but there is that small gap which exists in a lot of these studies which are coming out.
Well, certainly no reason why there can't be any more female PIs. And eToro is well placed to make that happen. Buffett says, as long as you're getting the returns, doesn't matter. Nothing else matters. People will crawl over broken glass to put their money with you. Hope you're enjoying today's show. I'm sure you've subscribed already. If you are a successful copy trader, happy to share what you've learned, there's no need to have a public profile. Get in touch. The bigger the club, the better for you. So tell people on eToro about this show. Ask your PIs to come on. That way you will get to know them better. We build this club together. Right, let's shift gears a bit. Trades per week, 13.8, Average holding time 4 months. Now that leads me on to ask about you being a long-term investor. Your bio says 5 years. This is something I've been asking lots of people recently, and I'm still trying to understand it. You recycle positions entirely. You close positions and sometimes reinvest right back into the same stock. Is that you being a long-term investor but playing the eToro game?
Yeah, so firstly, I think I've heard other popular investors say this as well, but also the data scientist in me cringes a little bit when I hear the word average, because average doesn't tell us anything about the sample set. We could have many different scenarios of how we reached that 4 months. But one thing I can proudly say is that that number hasn't changed for me from when I was just trading on my own for almost 3 years, and after I became a PI. So I've always had this very conservative, I guess you could call it, approach where I consistently reinvest my profits. So yeah, it's not playing the eToro game for me, but it's just about, if I believe in that stock for the long term and I want to continue be invested in it, there's no reason why I shouldn't take my profits out and reinvest them. And there's a really interesting, I guess, kind of two camps. As young people, we're often told if we're investing in mutual funds, we should invest into accumulation funds. And then as we near retirement, we should switch to income funds. And actually, if you run the numbers on having an income fund from when you're in your 20s, as opposed to having accumulation fund, and instead of taking the income out, you reinvest it into the fund, you far outperform having an accumulation fund. And so that's essentially just what I'm trying to do in my own portfolio. It's just reinvesting the profits consistently.
So say you hold a position for 5 years. In that 5-year lifetime of the position in your portfolio, will it have come and gone a couple of times, 2.5 times, 3 times? Or will your core holding have stayed the same and you will have played around the edges?
I think it could have gone a couple of times. It could have come and gone a couple of times in that 5 years, because it depends on multiple factors. One is, where does that position sit in the rest of your portfolio? So we all acknowledge that even though we take a long-term view, short-term external factors can change our outlook and we have to respond to them. For instance, I'm still having a very long-term view on tech stocks, although they're a significantly smaller part of my portfolio now, as I have, introduced more stocks in the finance sector or the construction sector, because we currently have a pandemic and I couldn't have foreseen that 5 years ago.
If you weren't on eToro and you're investing outside of eToro purely for yourself, would you treat that holding the same, or would you just leave it and let it run?
I think I've already answered that question in saying that my stats has been the same since from becoming a PI and not being a PI. So I haven't changed anything in my strategy when I became a PI. I had always traded like that, or invested like that rather, even before I was a PI. So yeah, my stats have always been that way.
Okay, let's talk about communication. You do quarterly updates, which come out on your YouTube channel, Quidzin. Any plans for increasing video frequency? You mentioned that earlier. Maybe weekly updates like your compatriot, Wes L3Y?
Yes, I definitely have every intention to put out YouTube videos more frequently. It was part of the reason I started the channel. I do 2 posts weekly, kind of start of the week and end of the week, which are just posts on my eToro. But yeah, I have every intention to be more active on YouTube.
And you also have a website, griefinvest.com, which is a bit of an expansion on your profile. insofar as it has an FAQs page. Do you think you're a good communicator with your copiers?
I definitely think that I am. I try and, if people write to me either via the website or via any of the other channels that I've made available, I do answer them. But as I've mentioned earlier, do I put out the same number of YouTube videos as somebody who is full-time eToro? Probably not. I can't compete with them. And so, yeah, it's just about finding time, learning new skills on how to do all of these things.
Okay, just to let you know that air quotes don't come out very well in a podcast.
Thanks.
Full time. Okay, Heloise, let's move on to your portfolio. In terms of allocation, stocks 88%, ETFs 7.5%, crypto 4.25%. Crypto was up to around 20% of your portfolio at one stage, but you had trimmed it prior to the recent crypto correction.
Yeah, that's correct. It was up to 20%, I think, in February at the height of the recent bull run, and then I managed to get out. Good timing.
I think that deserves a... Healthcare and tech are industries you know and understand. You've tried to diversify a bit more in recent times. European stocks, different sectors. Let's discuss any positions of particular interest now. There is one I wanted to talk about, which is Teledoc Health, which is very much in your circle of competence. Teledoc Health, for the listener, is a global virtual care provider offering a range of integrated services that connect general medical, mental health, and complex care and include telehealth, expert medical services, AI and analytics, and licensable platform services. So online doctors and health consultants system, basically. Now, it is trading at about 50% of its all-time high, or it was when I made these notes, around USD 150, having peaked at about 300 in February of this year. So you bought in June and July around the price of 150. Why was there such a big drop in February, March?
So I think the main drop in February was just around the reports which came short of the expectations. So I think during the pandemic, there was definitely an expectation that there would be a larger uptake of digital services in healthcare, which wasn't necessarily reflected when the company reports came out.
And speaking of company reports, they just reported Q2 earnings, missing on the bottom line. So a bear might make the case that they're showing widening net losses and not controlling their costs. Hence, the bottom line is not looking pretty. Would such a bear give you pause?
Not entirely, because sometimes, especially in healthcare, there's a big lag between technology uptake. The pandemic has really helped to speed that along. I mean, telehealth is nothing new. It's been around for a really, really long time, but it's really found its place in the market or in the general man on the streets world because of the pandemic, because we were forced to go online. And so, one thing which I'm really optimistic about in this sphere is for the first time, we're seeing that clinicians are using the right kind of language and that they're kind of speaking a similar language to the engineers who are developing these platforms. And so, yeah, it will be interesting to see how many of these things stay around after the pandemic ends. I think a lot of them will. And as generations go on, we might be less and less likely to even interact with healthcare services directly and feel more comfortable with these types of services. And yeah, always when technology like this is being developed, there is a certain burn rate which they uphold to make sure they can grow the user base initially.
Sure, and things are growing. Their top line is growing, isn't it? Revenue and gross profit both going really well. But I was looking into it myself recently, and there's a lot of effects to the bottom line because of this merger that they did, Livongo. The effects of that merger are still being felt. There's a bunch of reasons why, despite their good top line metrics, the bottom line's not looking so clever at this particular moment, which suggests it could be a good entry point. And like I say, you just bought in at this price. I'm very interested to see how this works out.
So you and I'll both be keeping a close eye, Gavin.
Okay, so let's talk more about your approach. I hear you say things like, don't be greedy, don't get emotional. You describe yourself as being fully unemotional when you make a move.
Yeah, that's correct. That would be a good summary. And it's a dear lesson I had to learn. Since you've done your homework so well, you probably would have come across my early days on eToro where I was day trading largely oil. And so that was, a humbling lesson in patience and the effects of not being emotional when you're making a decision.
Yes, and you use the word humbling correctly, like nobody does these days. You're properly humbled when you make a balls of something, not when you're given an award and you say, thank you, I'm humbled. Anyway, just in passing, we'd always like to debate language here. You don't use leverage. You analyze the data and make a decision based on your perception of the data. So, as we mentioned earlier, we touched on this, it isn't purely rules-based. There's plenty of room for human decision-making. Now let's talk about some human decision-making, something that I saw you dealt with recently in your quarterly update, and what some might see as the elephant in the room, and that is adding funds. I'm sure that's your favorite topic to discuss. So I understand you've decided recently to change things, but can we just explore that whole story and delve into the past a little bit? Can you tell the listener what the story has been up to this point with you adding funds?
Yeah, so I think adding funds as a popular investor is a slightly controversial decision, and I've probably erred on the side of the more unconventional decision in that I was adding monthly funds, something I had been doing long before I became a PI. When I just became a PI, I continued to do that out of habit. And then stopped it just because it was a logistical nightmare in terms of every month having to explain to people how it works, what's happening, and then decided to reintroduce it, I think in the beginning of this year, at some point. Um, yeah, and it's controversial in that I've heard you talk a lot about having a fully funded account and not having to add to your portfolio. And for me, that's really not what it's about at all. For me, it's about being true to who I am and being true to what my strategy is. And because it's something I was doing before, I feel that it's a way to, and this isn't true for everybody because some people just want to invest some money and walk away. But I think for in terms of our role as being financial educators as well, which is something we deal with as being popular investors, having that discipline of paying yourself first every month, which is really what I see the monthly deposit as, just shows that you're being serious in my mind. And that's much more important to show that you're willing to understand what you're doing, what's going on. And so it was more a tool to try and educate people. But yeah, it is a bit controversial and it is a slight logistical nightmare.
Yeah, no one's going to argue that consistently adding funds to your investment account is a bad idea for an investor. But when you're a popular investor, there's other things at play. And it's a flaw of the system that it's a problem. It shouldn't be a problem. As we've discussed on previous shows, PI should be allowed to back themselves without it sort of muddying the waters and giving rise to uncharitable views, such as the one I'm about to put to you. Which is, now I say this is the uncharitable view, obviously not mine, since I ooze charity from every pore, but the uncharitable view is this. A PI adding funds so regularly puts pressure on copiers to do the same, to stay in sync, and further that given the eToro pay structure, that PI could stand to gain significantly more in salary from the increase in assets under management than the PI's paying out to top up the account with. So it's a sprat to catch a mackerel. You pay a little bit more into your account each month, which ultimately increases your eToro salary enormously. I'm sure you understand that argument and can counter it.
Well, that argument is only true to the extent that the majority of your copiers contribute as well. Because if somebody does not add when you're adding, the difference is actually returned to their balance. So there's an increase and a reduction. So the net is only positive if more people are doing it than not, or the more amount than not. So I don't fully agree with that. I mean, I'm sure it's the intention for some people. But yeah, it definitely wasn't my intention because I believe in a lot more fundamental things which you should do correctly. And one of my things I see as is my role as a financial educator. And this is how I built up my portfolio. And so I feel some kind of a responsibility when people ask me, how, or, if they want to learn from you. This is something I did, which worked for me in my Toro. So, but yeah, I can definitely see how some people, and there's always a way, I guess, to game the system or for people to use good for bad.
And so, as for the future, you're now adding funds to a secondary account of yours.
For now, that's the decision. And it's really with a heavy heart that I made that decision because I also ran a poll on Twitter and there was more than 80% of, I think there was nearly 2,000 people who responded. So it's not, I mean, I don't think I'll ever get all 20,000 of my copiers to vote on this, but it wasn't like an insignificant amount of votes. And yeah, as I said, more than 80% of people wanted me to continue with the monthly investments. So perhaps even at some point, there'll be an option for people to choose, just like we choose when we go to a mutual fund, whether we want to do a lump sum or do a monthly contribution, and people can choose what works for them and what doesn't work for them.
Okay, and is that how you're going to be dealing with deposits from this point forward, or is it a temporary measure?
I think until anything changes on the eToro platform or that will probably be the stand that I'm taking now, in that I have temporarily paused deposits into my main account, although I am sending out reminders at the end of each month for people to add if they want to. But of course, there are pros and cons of that as well, because they're not copying open trades. They have to put in the minimum amount, so people don't have the option of putting smaller amounts. So there's pros and cons to both. If you have somebody who just wants to add $20 a month, then they can't do that if they're having to copy the open trades. So yeah, but for now, I've paused them and I'll communicate until anything else changes.
Well, presumably eToro will come up with a way to allow people to put more money into their system without causing such a hoo-ha.
Well, yeah, it's a bit tricky because it's the way copy trading works, isn't it? If I'm not putting more and there isn't extra, then what do you do with it that people add? So I don't know how much of it is a copy trading problem, like a pure maths problem, and how much of it is a eToro problem.
So now looking back on that whole story, do you view the approach that you took as a slight PR miscalculation?
Definitely everything as part of this journey has been a learning curve. There is no rule book. I'm very grateful to have a few very helpful PIs. Jay, Wes, and Yeppe are really great because they're kind of, ahead of me in this journey. So I often knock on their doors and try and just like understand how they thought through it. But I guess that's the thing about uncharted waters is that there's no correct answer, and we'll learn along the way. And as long as as long as the intention is good, and as long as we're being clear about where we're all trying to head, I don't think there's any harm.
Let's go back to a classic interview question. People are talking to investors. Tell us about your best and worst investments and what you learned from them. Oil is going to come up again.
Yeah, so any and all oil attempts when I just started my eToro. And it was a really hard lesson, not in that, I mean, it was a really hard lesson in terms of how to be patient. And it wasn't large sums of money. I didn't have a lot of money in my eToro at the time. It was a few $100s, but it was a lot of money for me at the time. And also, it felt like every penny which I lost was a kind of little voice of that person saying, I told you you're going to lose money. And so it was just having to fight that kind of questioning yourself. And yeah, it's probably more a thing about pride, because I've definitely had some bad trades since then where I've lost more in terms of quantity. But yeah, that's definitely the one which has been the most humbling.
Again, good use of humbling.
Thanks. um, should I move on to best trades?
Yes, please.
In terms of best trades, my answer is always the same, and it's a really boring answer. There's not one significant best trade where I can quote that I made 200% on this one position. I'm a really boring investor, Gavin. What can I say? It's I don't chase that highs. I have a strategy when I'm going in, and if it's 20%, that's my exit. Then that's 20%, and I never look back with regrets on either missing out highs or lows that followed after my exit. So there's no single best.
How about the crypto sale recently? That must have been quite tasty.
Yeah, cryptos have, I don't know if it's luck or skill, but cryptos have also always magically disappeared and appeared into my portfolio just at the right time. I had them in the portfolio in 2017 and just had a gut feeling that, it's getting too hot, and I got out. I missed some of the highs. Again, I had the same in last year where I got out, I liquidated a lot of my portfolio in January last year, which meant I missed out on some of the highs, but I also missed the really lows which followed in March, and again with cryptos this year. So yeah, I guess that's a tasty one.
So you didn't add recently?
To the cryptos.
Yeah.
I think I added some this week, yeah. But I'm definitely keeping my portfolio under 5% of cryptos at the moment.
So I saw a quote from you somewhere, Heloise, saying you're not doing it for the money. You're doing it for the passion. You enjoy the discipline of the strategy and being unemotional. The question that then asks itself is, do you have an income level at which you would consider going full-time on eToro?
It's definitely a conversation which my partner and I have had recently, because having, two jobs, I guess you could call it, is definitely stressful at times. Just I have time commitments for eToro, whether it's like media interviews or deadlines and getting back to them on certain things. on top of just my regular investing. But yeah, I wouldn't say there's a clear point for me where I would give up one over the other. It's both are equally complex in terms of letting me figure out the puzzle of the complexity, and that's what I enjoy more than anything else.
Let's talk about your copiers. Who should copy you and who shouldn't copy you?
So I think anyone who's willing to be patient and take a long-term view would be well suited for my portfolio if they're looking for risk-adjusted returns which outperform the S&P. And anybody who's looking to get rich overnight or who's impatient should definitely not copy me.
What role should you as a PI play in a copier portfolio? And can you describe the ideal portfolio with you in it?
So if I were to compose the ideal portfolio, I would probably choose a couple of popular investors, maybe 3 or 4, and look at ones who have slightly different approaches or strategies. There's no point in getting somebody who has a similar strategy to me. It will just give you more exposure to either tech or to, it'll be quite correlated. So I would say choose 3 or 4 PIs, depending on whether you're doing your own thing as well. I always ask people not to kind of tamper with the positions in the portfolio itself. If you're choosing a PI, you're choosing the whole package. You shouldn't be picking and choosing what you want from that person's portfolio. And yeah, just review them annually. And if they don't fit with your kind of comfort level for how much risk you're willing to tolerate, then you should probably look for somebody else.
Here's a question I was keen to ask you. Given your background in machine learning and data analysis, you must see lots of opportunities for applications to the eToro system. Can you give us an idea of what thoughts have come into your head regarding what could be done with eToro data?
Oh, if I could get my hands on that data, Gavin, I dream about that some days. Um, have so many ideas. I'm actually meeting the Chief Investment Officer, Jill Shapira, in a few weeks, and I'm quite keen to have my thoughts laid out. I might pitch myself. But yeah, in terms of data, I mean, it would be interesting to see what kind of data they collect on the user. But just if I had to guess, kind of uh, trading volume, the times at which people trade. I think they can do a lot more in terms of setting up their sales funnel, how they support people when they're onboarding them. You can quite easily predict based on somebody's performance very early on. So this is one project I worked on before in a credit scoring where you kind of score the performance of the user when you onboard them and you give more hands-on assistance to that person at the point of them joining the platform, because they can't give the same kind of attention to everybody when they join the platform. But you could kind of within the first week, if somebody is kind of trading, probably tell based on learning from other users whether you should be flagging that person for some more attention. So that could be one thing that they do. It's just one of many ideas I have of what they could do with all the rich data that they have.
We'd be here all night if I let you loose, giving us example after example.
Indeed.
Okay, rather than giving example after example, can you think of 1 or 2 changes you'd love to see on eToro?
In terms of the platform or the app itself, I think there are loads of things that you could change. But as somebody who's worked on a kind of tech platform before, I often know how those things just fall into a never ending roadmap. And so I think eToro is probably then waiting for the tech to develop and, fixing all their bugs, which I think has been covered by many other PIs, the obvious kind of user interface. I would probably look more at how they're onboarding people and how they're, like the example I just gave, for instance, that doesn't have to change anything on the platform, but it's probably like the customer service team just making better use of the data that they have on the back end side.
Okay, what other PI would you say you know best on a personal level?
So just like in school and probably many of my friends group now, I usually move on the periphery of many different groups. I'm a bit like the bumblebee who spreads all the ideas in between. So, as I mentioned, I touch base with some of the other elite pros every now and then when I fall into some kind of a roadblock. Then there's a small group of female PIs who we meet up to just discuss what feedback we can give to eToro in terms of supporting female PIs. But to be totally honest, the PI who I probably know the best, although he's a 2B PI, would be Cerebro8891, who is my partner and who I have dinner with every night. And we view the world totally differently. We have totally different risk tolerances. He's an emergency doctor, so he thrives on the adrenaline rush of life and death, which my data doesn't give me. And of course, we have loads of heated debates. So I know if I have put an idea by him and he's shot all the holes in it and it survives, then it's probably not the worst idea in terms of some investment.
He's having an awesome year in 2021.
Yeah, he's actually he joined in 2019 purely because I told him to, but he took very little interest. And it hasn't been until the end of last year, I think, where he's actually taken it a bit more seriously and he's been doing quite well.
He's been doing incredibly. Cerebro8891, future Black Star, 2 Black Stars in the family.
Yeah, I got the black t-shirt to show it.
Okay, final question. If you were in my shoes, what question would you like to have asked yourself that I didn't?
I think it would be around really understanding why you're doing something. It took me a really long time to come to terms with what I was doing on the eToro platform because, as I mentioned, I worked in a lot of social impact work and AI for good. And so there was all this tension between what does it mean to be in this other world of finance. And I get so many great replies from people saying that I invested $200 with you and you've made me $40. And now, Gavin, to me and you, that might not be a lot of money, but having lived in a lot of these rural villages in East Africa, I can tell you for some people that's, a year's worth of family income. And so I've seen what a difference that can make, even if it's just keeping the lights on in order for kids to do their homework. And so that's really one of the reasons I continue to be on eToro and hope that my example of not only being a female investor, but also coming from a developing country can inspire other people to, educate themselves. I'm not from a finance background. I might have had the privilege to have a Oxbridge education, but I don't have a finance background. A lot of it was also self-taught, although you could argue I was in environments exposed to it that made me go and look for the information. But yeah, if one message is just for people to know that, if we really want to talk about independence, especially for women and people from developing countries, financial independence is really key. And the internet has totally leveled that playing ground for people to take those opportunities.
Well, that's very interesting. And Heloise, it's been brilliant to chat to you. Thank you so much for dropping by.
thanks, Gavin. Thanks for having me. I'm glad I finally made it to the Copytraders Club.
Well, I'm sure it won't be your last appearance. We'll do it again in a year's time and catch up.
Can't wait for it. See you next year, and hopefully in between as well.
It was great to chat to Heloise today. Not our first female guest, but the first female PI we've had on the show. The calendar includes future chats with female PIs, and I hope Heloise's appearance will encourage others to sit down for a chinwag in the future. This is certainly not a gentleman's club. That's all from me. You can continue the conversation on Discord and Facebook. If you like this podcast and want to see it continue, you can do your part by recommending it to one person or group of people this week. Until next time we meet at Copytraders Club, I wish you many happy returns. Obviously, anything you hear in this podcast is for entertainment only, not financial advice. Do your own research. This is just generic chit-chat. We don't know your individual circumstances, etc., and so forth.